Hi, it's Susie again from Esoteric Trading Solutions. I hope you're all well. Live your life, be happy. Life's very short. So just wanted to touch base on valuations and how you determine valuation in a company or a crypto or any other security or foreign currency and the like. Did get some dissenters on my last video, and I have to say they're a bunch of wankers because seriously, they don't really know how to value anything, and they told me to read more. Well, I think they should read more and work in the markets, because since 2008 you could throw literally every valuation model out the window, every economic book and every finance book, because it means absolute crapola, bunkum in other words. In Australian that means absolute crap. The valuation models don't work anymore, and that's what we'll go through. Very quickly, and I don't want to make this too long, basically any company or any crypto is really hard to value, and it's almost like an art or a science to value anything. I mean, you could literally put your finger up in the air and say, right, what should the value of something be? But we do get wankers in this market that want to be negative about people that do YouTubes and things like that, and basically troll people. And their simplified version of the world is the valuation of a crypto or a company is market capitalization, which is like 100 billion of Ripple, for example, by its price. The reality is that is a very oversimplified valuation of a company or a crypto. It only takes into account a third of a company's or a crypto's balance sheet. It's oversimplified. It doesn't even look at the growth of the company, the revenues, the risk of the company or the crypto, the debt level, short or long. It doesn't look at the technology. It doesn't look at the client base. It doesn't look at revenue. It doesn't look at prospects. It doesn't look at contingents. And the reality is any of those things can blow the market capitalization away. Not only to say that companies or cryptos can always buy their issuance back and basically cancel it, or burn it if you want to call it that in this crypto world, or they can issue more or whatever. Markets do take things being issued more if it's a very bullish company in terms of revenue and client base. The reality is Ripple has the client base, it has the revenue. And, you know, again, one market capitalization to another is not the same, because you're not looking at the rest of the balance sheet, the revenue generation, the liabilities or anything else. I mean, a crypto could have, you know, against its name, contingents, legal liabilities. It could have liabilities. It could have anything. It may not be an ongoing business. It may not be an ongoing crypto. It may have short-termism in it, which you don't take into account when you look at the market capitalization. It is too friggin' simple. And the dickheads out there that told me that I should read more, well, I got news for you, buddies, Pablo and that other idiot. You should read yourself and get into the market, because you've got no friggin' idea. But anyway, again, market capitalization misses on a lot of important things, such as outstanding debt, the composition of that debt, whether it's short-term, whether it's long-term, whether interest rates are in yield curve, whether you fix the debt or whether you haven't fixed the debt. If you fix debt and you're in a negative yield curve environment, you've basically got a shitload of money to pay on that debt in a negative yield curve environment. Again, if you fix debt in the long end and the curve is basically inverse, in other words, if you fix debt at 10%, but now you can go and fund something, you know, at minus 10%, then you're paying a fortune for interest, right? You're paying 20% on outstanding debt when it's a negative 10%. Again, companies have gone broke, or cryptos have gone broke because of that, because they've fixed something and the curve has gone negative, like we've seen since 2008 because of government policy. Government policy has been buying the long end of the bond curve. It's been putting money into the capital markets because of 08 and 09 when there was a stock market crash. And the reality is all the yield curves have been inverse for a long time, which basically any model of valuation that we knew before 2008 doesn't work anymore. That's the truth of the matter. It is all garbology and everything has to be rewritten again. That is a fact. You know, since governments have had all these programs, central governments have been ploughing money into the system to basically support capital and financial markets. So using market capitalization is just so simplistic, it is a joke. You know, there's so many different ways you can value, you know, a crypto or a currency or a company. Enterprise valuing, again, you know, if we look at the equity market, it's value investing, where a company has great earnings, may have a large cap in terms of issuance, i.e. lots of issuance out there by the share price, but the reality is they have fantastic earnings, great management, just like Ripple, great resources, great revenue, perpetuity, go forward. They're going to bloody still go, you know, can still be around after 2 or 3 years. And what they call that in the equity market is value investing. Not all companies are the same. You cannot look at all companies in terms of market capitalization. The same for crypto. It's the same story. It's just another security. You can't look at it in terms of market capitalization. Too simple, dickheads. But anyway, again, technology. Again, what do you pay for the technology of a company that's got better technology than anyone else in terms of crypto land? Seriously, I mean, this is what cryptocurrency is about, technology, distributed ledger systems, you know, technology. If a company like Ripple has the best technology out, which it does, and it's still trading at 22 cents, and you idiots are buying, you know, Dash, or you're buying, you know, Monero, which are supposed to be privacy stocks, privacy cryptos, and yet the government can track down people that hold those current cryptocurrencies. What, man, they're not privacy stocks. Full stop. Not privacy stocks. And yet people are buying, you know, Monero 120 because it's got 19 billion on issuance, 16 billion circulating, just like Dash, again, 19 billion on issuance, 16 billion circulating, and so they buy these things because their market value, their market capitalization is low, so we should be buying them. Well, it's absolute bunkum and it's crap, because those things are not privacy stocks, and you're buying something for thin air of nothing. It's just garbology, absolute garbology. It doesn't work, and it's stupid investing, and it's dumb. That's pretty much it. Data matters, basically. Other data, other information. What sales have been written? You know, what is the business? What are they writing? What are the revenues? What is the quality of the client base? Are they getting more clients? You know, the quality of the client base that Ripple has is just unbelievable. They just put Amex on today. What do you think Visa and PayPal and MasterCard are beginning to thinking now? You know, MasterCard, right? You know, American Express can now do basically settlements within a second. If they use Ripple's currency rather than foreign exchange, they can save themselves millions and billions a year using Ripple's currency, because the bid offer spreads between foreign exchange market and Ripple's currency is, there's no comparison. In foreign exchange market, the bid offer spread is generally 3 basis points. If you have a big volume position, i.e. 100 million or 500 million currency position, the bid offer spreads are going to be 5 to 10 basis points. Ripple can do anything less than 1/10 of a basis point. Now, you don't tell me that American Express is going to look at that and think, gee whiz, we should be using Ripple. Absolutely. They're not going to use currency markets going forward. You know, if you're an FX dealer, you're going to be out of business, literally. Cryptocurrency is the way to go, and the banks will use Ripple's cryptocurrency. I'm talking about 2 to 3 years' time. All those idiot dissenters out there, you got no idea. Seriously, you got no friggin' idea. Again, gross margin is really important. Also, what is the debt of the crypto that we're talking about? If you look at market capitalization, you're looking at 1/3 of the balance sheet. It's not relevant. Seriously, it ain't relevant. It's oversimplified. You know, debt levels are critical to valuations of anything, whether it's a cryptocurrency, whether it's equity markets, whether it's debt levels, whether it's anything. You know, again, how much money does it have in the bank? A company or a crypto without money in the bank can fall over at any time. It's not an ongoing concern. If a cryptocurrency falls over because they have no money in the bank, like Dash or like Monero, because no one's using their technology, then they're not going to have any money in the bank. It's just that serious. Now, the other night I did a series with Dash and Monero. You know, Dash, you know what? You know, in 3 months, Dash, they've done 3,000 transactions, which is FA. Okay, I'm not going to say FA. Compared to Ethereum that had done 76, and compared to Bitcoin that had done 180,000. How much money do you think Dash is earning? Seriously. You know, how much are they earning from their cryptocurrency, which is up at 400 US, You know, oh yes, we've got 16 million circulating, you know, and we've got 19 million or whatever it might be, and the market capitalization is this. But the reality is, if it's broke, it's broke. That's it, you know, and it's just stupid investing the way I see it. I mean, I'm investing for two to 3 year period. Some of these cryptocurrencies, a lot of them will just not be around. It's just that simple. And all you idiots out there can do is keep putting Ripple down. Well, you're just a bunch of idiots as far as I'm concerned. Issue levels are completely irrelevant when you look at a forward, current, static or dynamic balance sheet. You're only looking at one part of the balance sheet of a cryptocurrency, one part. You're not even talking about qualitative or quantitative issues and how good the technology is. We're in the crypto market here, and you're not even looking at technology. Market capitalization doesn't even take into account the beauty of the technology and what they have. I mean, that's another thing. Again, just like, you know, debt or equity, you know, or you know, debt or equity or anything else, crypto markets, like anything else, get expensive. Just like debt, they get expensive. Just like equity markets, they get expensive. The market is not always right, and I've seen that since '87 over and over again. The market is not right. There is mispricing in the market all the time, and the crypto market is no different to any market. When I worked in bond markets, recently, you know, 5 years ago, when I worked in 2008, the equity market, there was mispricing all the time. And I'll give you an example of mispricing. When equity markets go up, everything tends to go up, whether a company's broke, whether they have huge debt, or whether they don't. Everything tends to go up with a bull market. You know, in this period of inverse yield curves, in other words, the long end of the yield curve being lower in yield than the front end. And so you can throw out your economic books and your fucking financial books, excuse the French, because, you know, any of those books will tell you that you're supposed to get compensated more yield for taking on more risk in the long end. Well, that's not the situation anymore. You don't get more yield for taking on more risk. You actually get less yield. So there you go. So the models don't work. You know, that's the reality of it. You know, crypto markets are not looking at things properly, I have to say. You know, a real business ongoing. Is the crypto a real business ongoing with perpetuity income? Because otherwise, you know, the crypto business is going to go broke. And I can tell you right now, a lot of these cryptocurrencies are going to go broke because they have no business. How many people use Monero and how many people use Dash? Not many people at all. And yet these things are valued, you know, Dash is 400 and, you know, Monero is 100, and they're not even privacy stocks. You know, they don't have end-to-end encryption, and they can be tracked by governments. What a joke. What an absolute joke. Anyway, the models, very quickly. You can look at valuation in terms of all different models, okay? Lots of different models. Capital asset pricing model, fair value model, efficient market hypothesis models, correlation models, price earning models, Taylor rule models. There's so many different types of models. Discounted cash flow models for equity, you name it. None of these bloody things work anymore. Since 2008, you can throw all these frigging models, all the economic and financial textbooks out the window. 2008 onwards, you've seen government bonds trading higher in yield than CCC rated corporate bonds. Now, I would have thought a CCC rated corporate bond would have been much more riskier than a government bond. But the markets have been so distorted with the central banks using quantitative easing, which has been ploughing money into the market since 2008, that all bond curves and equity valuations and debt curves and everything else have been completely all over the place. Things do not work the same as they used to because of their quantitative easing, the government buying the long end of the yield curve, and basically all the way the parameters used to trade are completely out of whack. Correlations don't work the same anymore. You know, valuations don't work the same anymore. The traditional valuations are totally irrelevant, I have to say to you. And that's what I was getting at the other night, but a bunch of dickheads are just too stupid to see that. Again, if you look at, equity markets on PE models, price earning models, the old models used to say sell stock when price earnings get above 25. The long-term average is, for the Dow, 15. Price earning model 25 is expensive. But we see stocks time and time again now on price earnings of, 78, 100, 120. It's irrelevant. The market keeps buying stocks because interest rates are negative. Everything is irrelevant. That's the whole point. Stocks will just keep getting more and more expensive. Academics, will say you've got to sell stuff because the PEs are, at 30 or 40 or 50, or because they're near the depressions of 1929. But the reality is stocks keep going higher and higher and higher because there is so much surplus money in the system that people are trying to find a home for any sort of yield or any sort of return. So the governments have distorted all markets, whether it be, equity markets, bond markets, money market, foreign exchange, you name it. And so, I have a couple of idiots trying to say you should value, cryptocurrency, on what's issued in the price. Well, you throw it out. It's garbology, I've got to say to you. Fair value models don't work. The capital asset pricing model doesn't work. What interest rates do you use? Do you use negative interest rates? Efficient market hypothesis doesn't work. The old correlations don't work. Discounted cash models don't work. Price earning ratios for the equity market don't work. The Taylor's rule for the bond market doesn't work, i.e. inflation plus GDP should equal a 10-year bond. Used to work in the olden days, but it doesn't anymore. If inflation's at 2.5% and GDP is at 2.5%, then a 10-year bond should be at 5%? No, it doesn't work anymore. Or the PE of the real estate market. In Australia, it's over 100. Academics were saying, sell the thing because the price earnings ratio is 100 when in the olden days it was 20. But the reality is, and they were saying this 7 years ago, but the reality is the market keeps going higher and higher and higher. Because how do you value the price of utility? How do you value the price of security? The old measures of valuation do not work anymore. And this is what I'm, back to Ripple. Again, revenue generation and ongoing, the ongoing nature of the crypto and the technology behind it is the most important thing. Again, Ripple, SWIFT, they're taking on SWIFT, $5.2 trillion a day business in foreign currency, 1,100 banks, 200 countries. I'll repeat this over and over again because there's so many idiots out there. Again, these guys can take over this market straight away and make a fortune. They had 15 billion in the bank, as I said. They've just signed up Amex to do all their foreign exchange. Amex aren't going to be happy with the foreign currency bid-offer spreads they get offered by foreign exchange dealers. They will use Ripple's currency. Every time Ripple uses their currency, as I said, there's burn. I feel like I'm repeating myself. I put on the freaking tape recorder. Now, what do you think Visa are going to do in PayPal and MasterCard now that Amex has signed up Ripple? If they don't sign up Ripple, those guys are going to lose all their business. I can tell you right now, I did a transaction from PayPal to my personal account, and you know how long it took me to get my money? It took me 7 days, 7 business days. Amex, they've just booked up with Ripple. Now they can transact within a second. PayPal, Visa, and MasterCard, if they don't do something fast, will lose their business. So what do you think they're going to do? They're going to make, or they're going to develop, a distributed ledger process, that's going to be as good as Ripple's? I don't think so. They don't have the time. It could take, one of them was talking to Stellar. They don't have the time. Stellar doesn't have the technical ability. I mean, every crypto I've looked at, seriously, they're lucky if they can settle within 2 or 3 minutes. I mean, honestly, it's just garbology. Bitcoin, friggin' 3 hours. Ethereum, if you're lucky, 15 minutes to 5 hours. Dash, Monero, I mean, it goes on and on and on, seriously. The global remittance business, again, Ripple's chasing that, 12 trillion a day. But, oh, no, don't worry, the market capitalisation of Ripple is really high. I mean, honestly, it's a small part of the balance sheet. It's not even looking at the revenue or the client base or the quality of their clients. Too simplistic, you bunch of idiots out there. As I said, 22 cents, it's so cheap, it's just crazy. Anyway, and again, I can tell you so many mispricings in the market at the moment. Swap curves, which are the bank's lending curves, borrowing curves, right? AAA rated curve was trading over a triple B rated bond. So you mean to tell me a major bank's swap curve in Australia is trading over a triple B rated bond? I don't think so. Every economic financial book will tell you that you should get more in terms of yield for a triple rated bond than a double A rated bank. Discounted cash flow models don't work anymore because the interest rates are negative. So in other words, if you have a cash flow and you've got a negative interest rate, the denominator is negative, 100 divided by a negative interest rate is going to give you a discounted cash flow of something ridiculous. When a company's revenue hasn't changed, that's just outrageous. Okay, so, earnings per share is the whole thing. Everything's flawed. Everything's flawed. Since 2008 and quantitative easing and everything else, it's all flawed. You can't even look at the way things were done. Throw out the rule book. Everything's, all the academic crap is crap now. Throw out everything because nothing works anymore. Okay, going forward, I want to make this quick, and it's suddenly, 20 minutes later. Again, looking at Dash, balance sheets are not the same. As we know, crypto issuance is not the same. Dash, they might have, 12.5, in the bank. They might have fixed debt, 130 million. Fixed, interest rates are negative, so they're paying all their interest expense against their cash. So in other words, this company's broke, okay? They barely have any assets, but they do have crypto on issuance and only 19 million at 400. But the rest of the business, bad technology, doesn't even make it, it's not private, it's crap. There's no revenue in the business because transactions aren't being done by anyone. And so where's the income of this business for a crypto of 400 US? That's what I want to ask you. But, as you idiots say, capital, it's only got, 19 million, or 16 million of crypto on issuance. It doesn't mean anything because the reality is if the company's not generating revenue or the cash that it's got is paying interest bills on its technology, it's worthless. The company or the crypto is broke. Seriously, it's broke. Ripple, 15 billion of assets, which is cash. No liabilities. But yeah, we do have a lot of crypto on issuance. Oh my, we really do. Which is, 100 mil by 22 bill. But wow, the rest of it, the difference between 15 mil and, this, is going to go to retained earnings. I mean, this is a profitable company of crypto and technology. And they have more, I get my zeros muddled up, but you can understand what I'm saying. They got revenue and they're getting more clients all the time. What's Dash doing? But it's still $400, for its cryptocurrency with a technology that's not even what it says it is. Beyond me. Completely beyond me. That's all I can say. So, what do we got here? We've got, 100 bill by 22, what's that? 2.2 bill, 15 mil, and the rest is 12.8 billion in retained earnings because it's profit. No debt, no nothing. More revenue generation because they're picking up more clients every day. And eventually those clients will all use Ripple cryptocurrency because, as I said, the bid offer spread on that thing with their technology is less than 0.1%, right? So again, coming back to this, and I'm repeating myself again, 100 billion. What do Ripple need it for? We're going to go tick, tick. They put on Amex, right? Just there. So what do you think all these idiots are going to do? This one, Visa, PayPal, MasterCard, what? They're going to hang around? They're going to hang around because the reality is the longer they hang around, they're going to lose their business completely. Amex can suddenly reduce all its costs of business very quickly. And what it can do all of a sudden is reduce its cost of its clients borrowing money. So it can actually generate fantastic deals for its clients and say to all its clients, whatever you're paying at PayPal, Visa or MasterCard, we are going to drop it and show you a quarter of what you're paying. What do you think all these clients are going to do? They are going to go to American Express. What do you think this, Apple Pay is going to do in the Alipay? What do you think these guys are going to do? They are going to go around to all the banks that show 12, 15, 18% on their credit cards, and all of a sudden, because they're making their costs have been reduced dramatically by using Ripple's technology, they have a comparative advantage over and above their competitors. Okay, thanks guys. I hope you got something out of this. Cheers. Bye.